Welcome back to the backtesting series. We left off last week with AUD CAD. We're going to test USDJPY today. So first of all, let's take a look at what we had last week. Like I said, AUD CAD performed relatively well, around a 39% win rate, 22 trades, a total of I think 5 or 6 losses. Let's see, yeah, five wins, and then 8 losses. So today we are going to do USDJPY. So let's get started with that. All right, USDJPY. I'm going to be breaking down the trades a little bit more. I've gotten some DMs about people asking me if I wanted to break down the trades a little bit more. So that's exactly what I'm going to be doing today. All right, 2016, December 31st. There we go. Create session, USDJPY. Awesome. All right, so before I get started, like always, if you guys have any questions about the strategy, or if you guys want to check this strategy out, check the link down below, check the description. If you guys want to reach out to me on Discord, my Discord is up here. If you guys want to check out the strategy, it's down below in the description. But let's get right into it. You guys are not here to hear about that. You guys want to see how the strategy performs and the way I'm approaching the strategy. So let's get right into it. January 1st, let's get started. I think that UJ tends to be a very trendy pair in 2016, if I remember correctly, but I'm not entirely sure. All right, I see the first setup down here, and the way I'm taking this is because this is my low, this is my high, my lower low. Basically, that's the structure that I'm looking at. So we are going to be taking the short from there. In the meantime, I do have to keep an eye on the clock because I do have to get going. So I'm going to have to hurry up a little bit this session, which I do not recommend, by the way. Take your time for every session that you have. Unfortunately, it is the middle of the summer, and I've got a very busy schedule this summer, so it's not always as easy as it sounds, and I'm sure you guys know this. The next setup, so technically this is your low, this is your high. I like to focus on the most recent high instead of the highest high, so that's why I'm going to be taking it from over there instead. Auto break even, 1R. We always use the 1R break even, so that's +3. Let's move on to the next one. No body closure. This is a good setup, but there's no body closure, meaning I'm not going to take that. I like to see a body close above or below a certain point of interest, just so you guys know. And for those of you who've been following me for a long time, you guys know I like to avoid, for example, trades that come really close to entry and then to target, trades that don't have a body closure. That's just the type of stuff that I like to avoid. This one's relatively large, but we will take that still. There's people in my DMs who will say like, hey, but I would not have taken that trade for X, Y, and Z reason. And I'll agree, and I'll tell them like, hey, I agree. That is not the highest probability trade. However, for those of you who know me, who've known me for a longer time now, you know that I'm not necessarily focused on the highest probability trade, but I am more so focused on getting a good frequency in combination with getting a decent win rate, because ultimately frequency is what it's all about. Okay, this trade right here, kind of this area over here being your high, this being your low. I'm just looking at the most recent high. Auto break even on. For some reason that's a little laggy lately. Let's see what we get. And that looks like it's a trade that's taking quite some time to play out. And this is one of those cases. In the meantime, guys, if you have a trade like this that's taking a while to play out and you see another trade form, you can literally just take this trade as well. Some might consider it a scale in, but you're essentially just taking a new trade. I'm not going to do it now because I never really do, to be honest, but you could if you wanted to. That is a break-even trade. Took quite some time to play out, but we do get a new trade right after that. That long trade over there. wish that would be a little faster, the whole auto break-even thing. I'm not sure why, but that's been incredibly slow recently. This is risk-free, ends up being a break-even trade. So as you guys know, or as I said just now, I'm going to have to do this a little faster than usual because I am on the clock right now. Be somewhere soon. But that doesn't take away from the fact that we will do our best to backtest this pair properly. And we are going to backtest it properly, obviously. Decent setup over here. Let me break that down real quick. Low, high, lower low, breaker structure. This would be the higher high or the highest high, but I'm focused on the recent high, so it's extremely simple, guys. I'm sure you understand by now, and if you don't, well, I've got plenty of videos like this which I break down the strategy, so check those out. Check those out. A little bit slow, eventually ends up being a winning trade, so that's plus 3R. Now the pair is just dropping. No trade so far. Do have one over here. The way I'm seeing this, most recent high, most recent low, high, high. You want to be more conservative, look at it like this and take it from here. But I am not that conservative, so I won't do that. I'm going to be taking it from the recent structure. There's two ways to approach this strategy, really. The way I do it is considered to be aggressive. I'm okay with that. I'm okay with having more losses, having a bigger losing streak. I do not get emotional at all in a losing streak because it's just I know how to rewire my brain. And if you guys know my channel, you see my videos. This one is valid too, by the way. It's a little aggressive, but it's totally valid. If you guys see my videos, you know that I like to preach psychology and I like to talk about how you're able to rewire your brain. Once you've rewired your brain and basically reprogrammed it, it becomes really easy to no longer associate losing with painful or feel any form of emotion for that matter when you're in a trade. Even if it is a live account or a live funded account or your only 100K account. And also, obviously, a lot of it is experience. We're in May right now, going into the summer months, which, as you guys know, and as you guys have seen in my previous videos, are notorious for being a little slow. Once again, very easy trade. This is our high, this is our low. However, I'm looking at the most recent high and low, and that's what you see over here, pretty much. I'm going to extend that. I'm not going to recalculate the whole position because I just don't care. It's like a minor difference. It's like a $50 difference, so I don't really want to redo the whole position just for that. Okay, let's see. Winning trade eventually moving us to around 9R in profit. So far, so good. Another very easy to see trade. And trust me, guys, a 30% win rate is more than enough with this. Might not be the easiest mentally if you don't know how to rewire your brain, but it is very profitable. And if you want to be a little bit more conservative and you want to pick the trades a little bit more, then you can do that, and that will get you a higher win rate. But ultimately, you know, you got to choose. Do you want to have a high win rate, or do you want to become a really profitable trader? They're two different things, in my opinion. And I believe that a high win rate does not at all correlate to becoming a really good trader. You know, you can have a 90% win rate, but if you're only allowed to take 10 trades in a year, let's say you had a 1 to 3R, right? You had 90 trades or 90% win rate, but you're allowed to take only 10 trades in a year. Then you now maybe have 26R, right? Because 9 times 3 is 27, then minus your 1 loss is 26R. But let's say you had the same thing, the same RR, you know, maybe 1 to 3R, but you would have, say, 700 trades in a year. Maybe that's overkill. Let's do 350 trades in a year with around a 36% win rate. You would be up closer to around 80 to 90R. So you can see that there's still a huge difference, even though this is a new trade, by the way. Even though your win rate is essentially a lot lower. Okay, for some reason that's not letting me place the order. Let's see what happens. As you can see, guys, we are going into the summer months again, and that's usually when price starts to slow down a little bit. I've mentioned this before too, but if you are a person who goes on vacation, let's say every July 10th, for example, that's when you go on a vacation, make sure to not test that or not include that in your data. Because if you know for a fact that you always go on a vacation around that time, then including that in your data kind of messes up your data. Because let's say you have an extremely profitable month in July, you might not really be around in July. Okay, I'm going to delete that trade. Why? Because it got really close to my entry, then to target. So that is what I would like to call a missed setup or a missed trade. Valid setup over here. Looks like I might have missed that. I got lucky there. I missed out on a losing trade. The same thing happens for winning trades. I've mentioned it before, guys. Sometimes you'll miss out on a winning trade. Sometimes you'll miss out on a losing trade. And one key thing of backtesting is eventually you start to become numb to the outcome of an individual trade. And that's kind of what you want to get to. You don't want to have any feelings associated with the outcome of an individual trade. Now that's what we like to do, because we humans, we're greedy basically. We want to make money. So we like to focus on how much money we could make. I like to ask people, let's say you're trading the exact same way you're trading now, but all you could risk was $1. Would you still feel the same amount of emotion? And people would say, well, no, obviously not, because that's not a lot of money. And I tell them, like, that's the point that you want to get to. You don't want to have any association with the money that you are winning or losing. This trade would have probably stopped you out right at that point, especially because it's a Friday evening. I think that would have stopped you out. But the trade basically a low, a high, a lower low, a break over here. I do not pay attention to the imbalance that's above it, really. I do not really care about that. Let's see what the time is. It's 6 o'clock here right now. I'm going to have to finish this up a little bit faster. Okay, another trade, basically the same idea, right? I'm seeing a high, seeing a low, seeing a break to the downside with an imbalance here. I'm not taking it from the higher points. Why? Because I'm aggressive. I'm an aggressive trader. I like to take my trades from the most recent points. If you are less aggressive, you will then take your trades from the more conservative, aka the highs or the swing points. That's not my style. Right, eventually leading to a break-even trade. And then the choppy price action continues all the way throughout the end of August. September, kind of the same thing. And usually in September, you have a couple of weeks in which I like to call the after summer dip, which is right around here, in which the market still is relatively slow, but slowly starting to gain momentum again. This is a valid trade over there. Two, once again, multiple ways of looking at it. You can look at it from here to here. Or if you're more aggressive, look at a more recent structure like that. That's what I like to do personally. Now, it's not necessarily the fact that one is more profitable than the other. It's mainly personal preference. I like to be in and out of a trade, meaning that I'm not really going to be in a trade for more than a few hours to a couple of days. I was going to delete that. I could have got close to entry, but I didn't. So that's a losing trade that I should have avoided. But it's not like one is going to be ultimately that much more profitable than the other. It kind of is personal preference at the end of the day. But like I said, I like to be in and out of a trade. I don't want to be involved in a trade for too long. So that's kind of why I do it like this. Slow price action now. Going into October. Mainly sideways. That is our first trade though, however. And let me break that down real quick. High, low, higher, high. Yes, these are the outer points, the extreme points, but I'm focused on the most recent structure, and that is the most recent structure to me. So let's throw in that break even. I should have deleted that. I did not. So let's see what happens still. Ends up being a break even trade. And this is the fastest way, honestly, guys. You've seen me do it on a couple of videos now. This is just the fastest way to backtest. Just doing your monitor into split screen. Doesn't matter if you have a laptop or a PC, whatever. Just split screening your monitor, putting it on one side of the screen, and just spam out the trades real quick. And you can see it takes me 15 to 25 minutes to backtest an entire year on a pair. And I have backtested close to, I think this is my third or fourth video right now. And we are approaching around 100 trades. That's a loss. Around 100 trades with literally about an hour and a half of backtesting. So do not give me the excuse that you're too busy or that you don't have time to backtest. Everyone does. I missed this trade. This would have been a valid trade, but I did miss out on that one, unfortunately. But never give me the excuse that you don't have time to backtest, because that's just not true. You can see that I'm doing it within an hour and a half right now, just by putting my monitor in split screen and just spamming out the trades. All right, we're approaching December, so this is the last full month of trading right now. Try to maintain the same level of zoom when stuff like this happens. A lot of people will start zooming out like this. Try not to do that too much. Okay, this is a little bit of an experience point. I am now going to take this trade from down here. The reason being is because when a candle is as small as this one, I like to compare it to a pillow, basically. And if the pillow is that thin and that small, the price is really likely to just, you know, go straight through that pillow. However, you take the cushion a little bit thicker, then it's a little bit more likely to respect it. And when it's as thin as that, basically, that's when I like to avoid it. Now, I'm going to delete this trade in general for the sole reason that we got close to entry and then went all the way to target. Now we are approaching December. We are in December now. This is another valid trade that I see over here. I'm not going to take it anymore. Got close to entry, close to target. I'm going to delete that trade for now. Let's see, that should be the end of the year. All right, December 15th, that's when I stopped trading. So let's skip to the end. Let's see what we have. UJ around 8R. Yes, leave the site. All right, 41.6% win rate, around 17 trades, a little less than we were used to. Overall, not bad at all. So let's take a look at what the strategy overall has right now. We've got 67 trades with around a 46% win rate. So far, so good. Nothing special, nothing crazy. 21 wins, 24 losses. The total year to date is down here, 40 are so far. And we've only done a couple of pairs, but we're also obviously going to have losing pairs. So that's it for now. If you guys want to check out the strategy, the link is down below. If you have any questions, reach out to me on Discord. Thank you for watching this video. I'll see you in the next one. Take care.